Hello, and welcome to Breaking Alpha. Today we'll be talking about the buy and hold trading strategy. Now, this is a long-term investment approach where an investor buys a stock or portfolio of stocks and holds on to them for an extended period of time, regardless of short-term market fluctuations. We'll be going over the programming in Excel as well as doing some backtesting so you can see the performance over time. Let's jump into it. This video and channel are for educational purposes only. Breaking Alpha is not affiliated with any financial institution. Data shown in this video should not be considered recommendations or solicitations for investments. This is not investment advice. Breaking Alpha provides purely educational material to allow you to become a more informed trader. Those looking for investment advice should seek out a registered professional. Breaking Alpha is not responsible for investment actions taken by viewers. Okay, and here we are in Excel. You can see we're programming the buy and hold trading strategy. I have a ticker here for Apple, as well as some example data of Apple between this time frame, June 1st, 2017 to May 31st, 2022. We're looking at the time frame using a daily interval and an investment amount of 5,000 for this. So firstly, for buy and hold, we're going to need some parameters. The most important one right off the bat is the date. We're going to need the close for each time frame since we're focusing on the daily calculation here. We're going to need the shares that we'll be buying at the start as well as holding for that term. And we're going to need the total value of those shares over time. So the date is pretty easy. We already have it here. Go equals. We'll grab the date over here. Close that up. The close, we also have the close. That's quite simple. Here's the close. Now to get the shares, since we do have our investment amount up here, will be easily to pull the shares just by dividing them by the close. So we'll take the investment amount and we want to keep that static in this case. And we're going to divide it by the close. And there we have the total amount of shares. Now let's lower this down a little bit. We don't need to know the full amount, but that works okay, just 2 decimal places. And then in order to get the value again, we're going to take the number of shares we have just calculated, and we're going to multiply that by the closing value. As you can see, we have a value of 5,000, which is it's a good checksum there. So if we take these and we highlight them and we drag them down, you can see the value changes, but there's an issue here. The shares change. And we don't want the shares to change. We want them to stay the same. So we'll just use the ones above. And there you see our value changed as well. So on the 1st of June 2017, we bought 1,300 shares at a value of 5,000. And on June 2nd, 2017, the value rose by 56 cents. Therefore, our total value of shares at 130.57 shares had an increased value at 5,700. So if we highlight this and copy it all the way down, all the 5 years here, you can see the total value, 19,433. Not bad. So what we're going to do, and in the previous video, we went through our portfolio where you can see each share. Please click the link below if you'd like to see how we calculated each one of these. But we're going to apply this buy and hold strategy to each of these tickers. So since I've calculated it, I can just copy and paste it across. Makes it much easier. All right, so we have the buy and hold there. We're going to copy, select Apple, and select the other stocks as well, the other tickers, and we're going to paste it. All right, there we have it. As you can see for Apple, it's populated from our initial trading algorithm here. For Microsoft as well, Google, etc., they've all gone across. So if we look at the overview, here we get a good understanding of where we are. So here's the trading algorithm, the buy and hold here on E and F number 2. You can see for Apple, this saw a profit and loss of 14,000 which is equivalent to a gain of 288% from that initial investment of 5,000. Now we have 20 tickers here. So we look at that. If we took 100,000 and divided them amongst the 20, 5,000 apiece, this will give us a good understanding of where we are. So our net profit and loss, we saw a profit over the 5-year term of $184,000. Quite a bit considering over that 5-year term. That definitely falls in line with our approach of buy and hold. It's a long-term investment strategy. And your underlying idea is that it does go up in time. And again, this is profit. So we look at our gross profit and loss. Obviously, we didn't lose any on our initial investment of $100,000. And so, our gross profit is quite high. We didn't lose any. And then what's really interesting are our average equity profit across the board. So over that 5-year time frame, we saw an average profit of 178%. That's quite good. And that's really dependent on the market. There's a lot of conditions there that can determine this, but it gives you a good understanding. And why we started with buy and hold is we're going to use buy and hold as really kind of the basis to compare other trading algorithms against. As we get more advanced trading algorithms, MACD, etc., we're going to see how they perform against just a standard buy and hold strategy. And so that will be calculated over here in the K and L values. And here's the buy and hold here. So since we used buy and hold as our trading strategy this time, if you calculate it against buy and hold, it's 0. There's no difference in gain. So the general idea behind the buy and hold strategy is that the stock market tends to rise over the long term, despite short-term fluctuations. Short-term fluctuations are very common. This period was over the COVID term when we saw a market drop of 50% plus across markets around the world. And so the buy and hold strategy does not account for that. It doesn't care. It works on the fundamental idea of stocks will rise over time. One of the key advantages of the buy and hold strategy is it can be simple and low cost. It's very easy to enter. And buying and holding a diversified portfolio in stocks, you can avoid the need to make frequent trades. It saves you time, it saves you cost and transactions fees if you have them, and it takes out emotional decisions. It definitely could be a good strategy to implement in your investment thesis. If you have a long-term vision and you're okay with short-term volatility where you're not worried about it. However, there's always risk that a particular stock or portfolio of stocks may not perform as expected, which can result in losses, of course. But if you like this, if you learned something to see how buy and hold works and how you can backtest your strategies, I'd love if you can give it a like and please subscribe for more videos. Thank you. This video and channel are for educational purposes only. Breaking Alpha is not affiliated with any financial institution. Data shown in this video should not be considered recommendations or solicitations for investments. This is not investment advice. Breaking Alpha provides purely educational material to allow you to become a more informed trader. Those looking for investment advice should seek out a registered professional. Breaking Alpha is not responsible for investment actions taken by viewers.